Yes, hello everyone. Welcome to this brand new video on my channel. And in this one, we're going to be exploring a pretty important topic. I've been asked this quite a lot, why is it, for example, sometimes my smart money concept analysis does work, some order blocks are respected, or perhaps you say it's supply and demand. It's respected, but other times it's completely disregarded. Now, this is one thing that I was exploring recently this week on a one-to-one call with one of my students. And he just recently completed the course. Obviously, it's been a few weeks of back testing and testing the strategies. And one thing he realized is when he was testing certain setups, for example, we're going to be exploring one of them today. When he was testing certain setups, at times it would work and at other times it wouldn't. Now, when we started to look through this, one of the examples was USDJPY. And that's pretty much what we're going to be going through today. Why is it, for example, this order block right here at the top? Let's just say this. So the setup was we have equal highs, we can see on the top left-hand corner, and then eventually a bit more consolidation. So what you started to mark up this chart as was a Wyckoff distribution. Okay, in all fairness, at some point you could really mark it out and potentially you might get a Wyckoff distribution. We might be going through that in, a few videos to come. But in this one, I just want to explore pretty much the reasons behind the market and why certain order blocks don't work. And really and truly, it comes down to fundamentals. USDJPY is one of them examples right now that is so clear cut that you should not be trading in one direction. Now, this is one thing I always say to my students. Whenever we do our weekly analysis, this is the type of thing that you want to be looking at. First of all, it's always your fundamental research. Now, the reason I say that is because with fundamentals, what you're able to do is you're able to understand the directional bias of a certain currency pair. Now, the way we do that, so from your fundamental research, what you're going to get is you're going to get the directional bias of a certain pair. The way we do that is, first of all, we explore each one individually. So as an example, we're going to be exploring USD here, and then also JPY. So this is the type of thing that I do every week. Whenever I do my analysis and my research, as we're exploring all of this more and more, I have a bias on both pairs, both positive and negatives. I outweigh them and then I get my conclusion from it. As an example, most recently last week, I even sent this out into the free Telegram. So if you haven't joined that yet, I'll just show you a quick preview. So if you haven't joined that yet, it's a completely free group. You guys are free to enter, about 8,000 subscribers in there. And I sent out some of the weekly analysis that we were going through last week, pretty much exploring some of the fundamentals, some of the technical charts as well. And of course, we got our bias in the end. But this is the type of thing that you really want to be doing. USD. Now, overall, I'm not going to be going into all of the details, but pretty much for the US dollar, I've been very, very positive in it, positive on it recently. A lot of things have been happening with their rate hikes, how aggressive they've been in that manner as well. And also, as a central bank, they're one of the most progressive throughout the world as well. I would even say this and the Canadian dollar or the Bank of Canada, they've been the most hawkish in that sense, increasing interest rates by 50 basis points, by 75 basis points. This is the type of thing, especially in this type of market, that is going to strengthen that currency pair. I'm going to be exploring that in a bit more detail, but overall conclusion, still looking quite positive on it. Then we compare this. So here we look at some of the other pairs as well. And of course, guys, I do this every single week with my students, always sending it into the Discord as well. So when it comes to all of that, obviously I send my weekly analysis, fundamental breakdowns as well. Always the first thing. This gives me my bias. Then I look into the weekly analysis. And of course, from that, we get our points of interest to, to buy and to sell certain pairs. If you are interested in all of that, all links are in the description to join, or either on the Instagram, also on the description of this YouTube video. And yeah, we pretty much go through, all of that in a lot of detail, about 80 videos in the course. So there's a lot to go through there. But back to what I was saying. So we look at US dollar first, then we also look at JPY. Now, in terms of the Japanese yen, they've been one of the most dovish central banks. What this means is they've been quite rigid in their monetary policies. They're keeping interest rates as low as possible. And in a time like this, whoever keeps their interest rates a lot lower compared to somebody who keeps them a lot higher, you're really going to see that divergence or monetary divergence in the market. What I mean by that is exactly this. Let's just look on the higher time frames. On the daily chart, for example, could you possibly tell me as a technical trader why this has kept on buying up and buying up? At some point, you could have said, okay, for example, over here. Here could have been a nice sell zone, right? Obviously, we're in a downtrend over here, and then we could potentially start selling from there. But no, it starts to continue. Again, another potential area that we might be looking at. For example, this area right here. Again, it just completely smashed through. For months and months and months, I've been saying the same thing to my students and also to all of you on Instagram as well. USDJPY, do not be looking for sales. Um, if I'm given any sort of reason to believe otherwise, whether JPY steps in and changes their stance on all of this, then potentially yes, we could have a different viewpoint. But for now, it remains the same. So, based on all of that analysis, USD, JPY, USD stronger, JPY has become weaker. So this is the way I would, always describe it to students. For example, if I'm expecting a stronger US dollar and a weaker JPY, what that means is USD JPY starts to buy up and buy up quite aggressively as well, because they're so polar opposites. Now, when we come back to this analysis that we were looking at, and I've seen, I think I put a poll on Sunday or Monday asking people, what pairs are they looking at? And a few people sent me their analysis as well, just so I could have a quick little look and, give my viewpoints on it as well. USD JPY, they were expecting some kind of sales from here. Now, if I was to explain this, you could easily say, okay, we've got equal highs at the top. That's been taken by this FU candle. Obviously, guys, if you don't know, an FU candle is pretty much where you've got, for example, some equal highs. So there, for example, right here. Then it's the candle that takes out this liquidity and then drops completely. So this area right here starts to become sensitive, as you can see. So it's that order block pretty much that caused that up move before the down move. That becomes very sensitive. And that's exactly the same scenario that we've got here. Okay, so as a technical trader, why do you think this would work? Of course, if you're just looking at that. But because we have this understanding of the fundamentals and the reason why we shouldn't be selling, this right here would have required a lot of confirmation. And I explored this in my setups from last week. It's in the recording that we had with the call last week. What I was saying was this. Of course, we can monitor this area, and I would be looking at this order block right here. I believe it was on the 30-minute chart. But what I would really require is some kind of break of or change of character at a significant primary structural point. Now, we have got equal lows here, for example. So this would be a nice take profit area. But what I would really require is, a massive break downside to then potentially enter. So the only way I would say is this. If you're going to keep a rule with you is, I'm going to write two things. If you are trading pro fundamentals setups are a lot more valid because of this confirmation. So if you are trading within the direction of where the market is going to be headed, so USDJPY, we were given that directional bias that we're going to be buying it upwards, pretty much most order blocks are going to be a lot more valid. So for example, on the way upwards, you see how nice order flow is. Let's just go down to the 15-minute. Order flow is very, very nice to the upside. It's very well respected. So as you can see here, for example, every pullback might be a bit more shallow. So that's the only problem with entering, very, very pro fundamentals or very pro trend. It's going to be sometimes hard to get these pullbacks just because of how aggressive it is to the upside. So pretty much that's that right there, You'd have to keep on testing it and see how you can get into the market. But if you are trading against fundamentals, against fundamentals, this is the main thing. You leave yourself exposed against directional bias of the market. It's also a massive confirmation that you are missing. And understand this, even if you do go into profit and you set your stop loss to break even, that's not a problem at all. That's essentially what you want to be doing. But if you do keep your stop loss open, for example, you are more prone for your entry point being taken again. Or your take profit will have to be minimized. So just understand that even if you do enter against fundamentals, you need to be aware that at any point, price can reverse and take it. Now, if we had the example of this USDJPY trade, if I wanted to trade against the trend and also against the fundamentals, what I wanted to see is, for example, a break below this. So price could have done that. And then potentially some kind of order block may have appeared right here. So from all of that, that would have been mitigated, as you can see. A break below this primary low, and then enter on some kind of order block that appears here, whether it's a breaker block or a normal order block. That's what I would have wanted to enter on. Then as soon as we start to get some kind of reaction downside, usually with my risk management strategy, I like to put my stop loss at break even once we break some important point. But with this, if you are trading against everything that I've said, you want to put your stop loss to break even as soon as possible, pretty much as soon as it's safe, just because at any point it can reverse. And again, like I say, so many scenarios I see this happening. You know, for example, with the CPI data that came out just the other day, if you are trading against market expectations and against what actually happened in the market, that's the type of thing that you leave yourself open to. So what I really do want to say is this: get your fundamental knowledge to a point where you give yourself that backing in the market. You really do understand where the market is going towards, where it's heading towards, and then you could simply just trade in that direction. Because essentially, this is it. Every trade sorry about my spelling right now. Every trade that you enter, you want to have that fundamental backing. That right there is the most important thing, because even when I do think about it as well, every single week when I am doing my article analysis, a lot of the traders that work at the banks and release this kind of information, some of them literally just have an understanding of the market through fundamentals, and they literally trade support and resistance. Every single strategy, it works, but you need to make it work for yourself. So whether you use smart money concepts, whether you use anything else, if you have this understanding right here, trust me, you'll be going far in the market. But yeah, guys, that's pretty much it. In terms of actually learning fundamentals and everything, I really do want to be bringing more and more videos. So you're going to be seeing a lot more. This was really an introduction to this whole understanding. I really wanted to make you understand why certain analysis for you might not work. You blame it on certain things, but really and truly, it comes down to all that I've spoken about in this video. Now, of course, in the next few videos, I do want to be exploring this a bit more. You guys have seen a little example of USDJPY and what we can expect. But yeah, going to be getting into it a lot more. In the meantime, if you are interested in anything that I do provide, of course, all links are in the description. And a lot more free content as well is being uploaded on Instagram. We're just about to hit 20,000 followers. So yeah, definitely look at all the stuff that I've been uploading recently. Hope it does help. But yeah, guys, take care and I'll see you all in the next video.